Okay, good. So as I said, we are going to be going to balancing or closing off T accounts. So at the end of a period, and they're talking about an accounting period is when we do our accounts. Remember, we did the 3 types of account. We had real accounts, personal accounts, and nominal accounts. So the real and the personal accounts being your accounts receivables and payables, those accounts we balance at the end of a period. And the reason why we balance it is because those assets, liabilities, capital, because the personal accounts, the receivables are assets and the payables are liabilities. Assets, liabilities, and capital, what do they have in common? You've heard them stated together before. They all go in the balance sheet. The balance sheet, so it's easy to remember which accounts you balance, the ones that go in the balance sheet. You see what I did there? That is it. So those accounts, assets, liabilities, and capital, we balance off, meaning just like we did in the cash book, there is a balance carried down at the end of the period, your ending balance, and then a balance brought forward or brought down at the beginning of the next period. So we are balancing off those 3. And then the third one, which would be the nominal accounts. Nominal accounts are considered temporary accounts, meaning that they are only there for the period to calculate your net profit. So remember, net profit is basically your revenue or income minus your expenditure. So those 2 nominal accounts, those are nominal accounts, expenses and income, which go into the income statement, not in the balance sheet at all. If you remember, when we did the balance sheet, you saw none of those expenses, none of those revenue. And if you saw it there at all in your answer, well, I thought you saw that you got it wrong, but then we found out that you don't see the comments. Well, you would have gotten it wrong. Okay, if you put those in the balance sheet, you get it wrong. So nominal accounts, which are the expenses and the income, they close off. So we closed it off. And what do we mean by closing it off? We take whatever the amount is and we transfer it to the income statement. Okay, so assets, liabilities, and capital, which are real and personal accounts, they are balanced off. So you see in here, in your books, you would see your table, personal accounts, balance, real accounts, balance. These are both assets, liabilities, capital. But your nominal accounts, so if it's a nominal account, which would be your income and expenses, you close off. So what we are going to do is our first activity, which is 4.4. So 4.4, which is on the same page, complete the following table by stating whether the account is a personal account, a real account, or a nominal account. So one of those 3, right? The type of account would be the 3. They didn't ask for the category, which is the Alice type: personal, real, nominal. And then you're going to state whether you balance it or you close it off. Remember, if it is real or personal, balance. Once it's income, close off. Once it's expense, close off. So in other words, once it's nominal, close off. And this should be your answer for 4.4. So we are going to deal specifically with the balancing. As I said before, we have already done balancing when we did the cash book. So when we did the cash book, you had to balance the cash column and then balance the bank column. So we are going to do the balancing of the bank column. And let's just go through the steps that I suggested one time. I always suggest that you, of course, you would draw your lines. I usually say to skip a line. So if this is the last line, I usually skip a line here and then I draw my total boxes, okay? My total areas. So you draw your total areas and then you look at the side, compare and see which side looks like they have the greater total. So this has a 12,500. This side does not have a big figure like that. So you can tell that this side is the side with the greater total. If you cannot tell what you're going to do, no, you will just get a calculator, calculate both sides, and then whichever side is the greater total, which in this case is your debit side, you just take that total and you put it in this area here. So the 12,500 plus the 2,000 plus the 1,000 is equal to 15,500. So first step, you added up the greater total and you put it on that particular side. Second step, go across to your next total and put the same total, 15,500. So you are never supposed to see two different totals. Note something. It's on the same line. So your total areas, same line. Reason why it is on the same line is because it is supposed to be equal. Think of a scale. Whenever you have a scale and it is equal or balanced, what happens? They are on the same level. So if it is like this, you're going to put more on the side that has less. You're going to put more so that it can become equal or the same level. So this is what this kind of represents. Think of it as a scale. It represents the two totals. This total is already 15,500. What this says is this total is supposed to also be 15,500. That's your second step. Is it on this side? No. No, this side had less. So that means that this side is going to have a missing figure here to bring it up to the 15,500. Remember what I said, if you have a side that is less, what you're going to have to do to make it balanced in terms of your scale, you're going to have to put more on the side that is less so that you can bring it to the same level. Yes? So that is the same thing you're going to do here. You're going to put a missing figure, and that missing figure is called your balance carried down. So remember, when do we balance? We balance at the end of a period. So that means the end of March, 31 days in March. So you're going to put March 31st. As I said before, this is your balance carried down CD, because you are ending, you are closing, closing as in C, closing or ending figure. So the C, you can always look at it as representing your closing balance carried down. And then you find the missing figure by minusing this total from your 15,500. And you would see the answer already in your books. So if you just want to double check to make sure that you are correct, you just add up all of your amounts on your credit side, including your 10,000, and you would get your total of 15,500. So this is basically how you balance. Nice, easy. Once you just follow the steps, I haven't finished yet. Just going to go over it very quickly again. First step, identify the side that has the greater total. In this case, we identified it as your debit side. So you add up your debit side and you get 15,500. Second step, you go across to the next one and you put the same 15,500. Next step is the side that had less. You're going to put the missing figure to make it 15,500. And that is called your balance carried down, which would be the end of the period, March 31st, balance carried down, CD, 11,000. All your balances, you see folios, ignore your folios, but just in case for those diligent people or curious people, if you want to know what the folio is for a balance, it is GG. Okay? And last thing that you do is if your carry down figure is on your credit side, underneath your totals, you're going to go to the opposite side, which you see over here, which is your debit side. Start the beginning of the next month. So after March comes April 1st, and no, I'm not fooling you, April 1st. And this time it's balance brought down, just like how you have here. B could represent beginning figure. So you see, coincidentally, we just happen to have carry down, closing, brought down, beginning. How nice is that, right? So balance brought down, and it will be the 11,000. That doesn't change. You carry down over to the other side, 11,000. And this is how you balance an account. Okay? You balance it. And then they suggest that you just go and you open the account one time for the next period. And that is the process. All right. Well, we may have questions when you do this. So this is 4.5. You are going to do that now, where you are just going to balance the account. Okay, so as I said, I usually skip a line because you don't know, especially for bank account, you don't know which side it is. For the other sides, you will know which side it is, but bank account, it could either be the balance carried down on this side or the opposite side, because you can either have money in the bank or a bank overdraft. So which side has the greater total? It looks as if it's this side, so I think it's the credit side. So you add up these things. Am I correct? Is it this side that has the greater total, the credit side? Yes or no? Yes, cool. Thank you. So you add up this side, and you should have gotten 257,000. So that's your first step. Second, you go on this side and you put the same amount, 257,000, not the 233, whatever. So now on the side that is less, if they had a date, you would have put the date, but you're now just going to put balance carried down. For all those that want to know, it doesn't matter if you skip a line, if you put it right directly underneath the debtors, as long as your balance carried down is above your total, you're good. I usually like to put it right above it. That's just me, okay? So once it's above, balance carried down, and as you all got, 23,700 is the correct balance. But you're not finished there. You had to go on the opposite side. For those that know, and the opposite, I just skipped a line. Opposite side, balance brought down. If you didn't skip a line, yes, it's okay. Balance brought down as long as it's under the total, and your balance brought down. If you carry down 23,700, no sorcery or magic happens. It's supposed to be the same 23,700 that gets brought down. Okay? So this is what your answer should look like. State the meaning of the balance. Remember what I said with bank account? If there is money in the bank, your balance brought down should be on the debit side. The fact that it is on the credit side means that it is a bank overdraft. So I didn't put it in a sentence or anything. You can just jot this down. What is the meaning of the balance? Which sometimes they ask you in an exam after you have balanced. They will ask you what is the meaning. Once again, if the balance brought down is on the debit side, the meaning is that it is a bank account, which is an asset. There is money in the bank account. Since it's on the credit side, it's a bank overdraft. Okay? So bank overdraft. So for the nominal accounts, we close off, which means that we transfer to the income statement. It's the same procedure. You look at the side that has more. For expenses and revenue, you usually only supposed to have things on the debit side for expenses and credit side for revenue, which is income. So you would see the debit side will have more. So it's 300 plus 600, 900. What was the second step? You go and you put the same amount in the next side, 900. And then basically the side which is less, which is obviously the credit side because it has nothing. You will have your not balance, but you're going to have transfer to income statement. But we usually don't put that long line, even though some lessons teachers still teach it as the transfer to trading account and the transfer to profit and loss account and all of that. For me, you don't have to put transfer to, you can just simply put income statement. So it's the ending of the period, March 31st, income statement to represent transfer to income statement. And what is the difference? Anybody knows? What is 900 minus 0? 900. So it will be 900 transferred to the income statement. Do the same thing with revenue. Side with the most, credit side. So you put your total, which is 1,000. Go on the next side, put the same 1,000. And the side that has nothing in it, you put March 31st, income statement, 1,000. And this is why you have that in your books. This is how you close off nominal accounts. So the only difference is that you don't have a balance carried down and then a balance brought down. You do the same procedure, but instead of putting balance carried down, you put income statement. And then you don't have to go underneath and put anything else after that. Because it's a temporary account, you've transferred everything out, you don't have a balance anymore. It ends right there. So any questions? So what they said is to use the bank account. Remember double entry, there are two accounts in a transaction. And when we post it, we realize that the other account is the second account. So all these things like sales account, rent received, debtors, if you go to sales account, sales is the account that was credited since it's on the debit side. So when you go to the sales account, you're supposed to see bank 157,800. So what they asked you to do is to post to your rent expense using your bank account. What is the name of the account? Rent. Which word you're looking for here? Rent. This is not rent, this is rent received. So this is not the one that you're looking for. rent, rent, rent expense for your rent account. If this is on the credit side, your entry will be on the debit side. But very simply, expenses. What do you do with expenses? You debit expenses. Okay, so you are going to your rent expense on the debit side. Who does not understand that? Two reasons why you're going on the debit side. First reason, expenses, you debit. Expenses, you debit. Expenses, you debit. Okay? Second reason, it's on the credit side of the bank account. So double entry rules mean that it has to be on the opposite side for the other account. So that means it still ends up as debit. And how much it is? 20,000. And that is it. That's the only rent expense you're posting on the debit side. And that means that to close off, we just put a double. When there's only one entry and there's nothing to add up, we don't put the total areas like we have been doing. If you do it, no, you are not going to get it wrong. So if you prefer to still put the total area and put 20,000 and 20,000, that is fine. Other people, if you prefer to just do it this way, if you have one item, you just put the total lines. This side would be a transfer to income statement, and how much it has to be? 20,000. It's as easy as this. Of course, if you had dates, you would have just put your dates at the side there. For the rent received, we are now doing rent received. So you're going to go look for rent received. Since rent received is on the debit side, you're going over to the credit side for your rent received. The second reason is very simply rent received is income. What do you do with income? You credit. So it's still on the credit side, your credit side. Your detail is bank account, bank, and the amount is 12,000. So you post it there, and then you just go to the opposite side to close off. Since there's only one item, we just draw the total lines on both sides. And how much are you transferring to income statement? 12,000. And that should be your answer for rent received.